Hey traders, Raghee here, and in this video we're going to go over a trade from this morning and a setup in the RTY. And I'm going to talk about a couple things to think about when you're day trading, options trading, and trading different index equity futures contracts. So the first thing is we wait for a breach. That is essentially the market tipping its hand. And that is what we had right here. Now this was the weakest of the four markets that we watch. Of course, ES and Q, YM, and then RTY. And the RTY is capable and very often will go off and do its own thing. That doesn't bother me. It's not something that I'm particularly concerned about. I don't want to see the ES and the NQ do its own thing. I want to see them move together. I'd rather the three main broader averages typically move together. Their weighting is a little bit more simpatico to one another, but the RTY, again, is its own thing with these small cap stocks. So market tips its hand right here. Immediately, that means we change our opinion from what is like a wait and see to now we are bearish through that level right here. Now, pay attention to what I'm drawing here because this is really important. For traders who want to play options, now if you're playing the RTY futures and you want to be taking the first and aggressive short of the day, that's it right here. Now in this current summer environment, I have not been recommending that. What I've been waiting for are things that we call retests and retreats. Now let's talk about the retest here today. So RTY breaks down. This is not the environment that I want to buy puts in. Puts specifically in the IWM because there's a whole lot more liquidity in this market than there is in the RTY. Take a look at the options chain. Take a look at the, say, June 14s for the IWM, and take a look at the weekly options expiration 8 days out on the RTY, which would still be the June 14s. And you'll notice nobody's home on the RTY. It's very illiquid on the options chain, while IWM is just buzzing with activity. That's why very often I'll tell you, go the IWM when it comes to options, not the RTY futures. Now, in a bearish environment, I don't want to be buying puts. I think that's an awful idea. You're going to pay up, and I don't want to chase. What we wait for, and I say wait because we don't know whether it's going to happen or not, but what we wait for is what's known as a retest. In other words, we wait for the market to come back up is the key word here, to that same level, same price level, gang, that the short was instigated at. But when we're trading up into this level, and now we're looking at puts, we really have a much more favorable environment for us to be buying. I'm not writing options here, gang, for us to be buying puts in. And that is really important, that momentum into that same exact price level. So that's really the trade right there. We didn't get much. I didn't like the conviction. I don't like being short the broader averages. Quite frankly, I'm not a big fan of that. But I am a fan of, again, following breaches that occur pretty early. We had some breaches in other markets that happened later in the 30-minute window, but this is a really nice early breach. I like when they breach earlier rather than later. I prefer that. Not that it's any more valid or less, but I do prefer that. Great retest right here, and you can see what we've had ever since. Now, great retest. And I would have liked to have seen also a move to the volume weighted average price. I mean, I just want to put a few other ideas out there for those of you that might be a little bit more conservative. A VWAP test would be terrific. A retest is just fine. But the overall direction that I'm looking at, specifically for the RTY today, is definitely short. So that's how these things are organized. In this environment, though, gang, and let me leave you with this thought, I don't like being short these markets. In this environment, especially with the broader averages, NASDAQ, Dow, S&P, I think the chance of a short squeeze is much, much higher. There are plenty of things that the market could be let down on. Things like talking about tariffs on Chinese goods or this, that, and the other thing, whether or not U.S. and Mexico find any common ground in this meeting that we're seeing over the next, 2 days. But ultimately, what I want to be is long. I'd rather be in a long position in this environment because we do have a Federal Reserve meeting on the 19th. When it comes to day trades, be flexible, but longer term, I definitely like the path of resistance to the upside. So until that changes, we'll see what happens. But in the meanwhile, quick look at a day trade, and I'll see you in the next update.